$114.09 million. That was the peak value of leveraged Bitcoin positions liquidated in a single brutal cascade event. Now, that number isn't just a statistic. It's the sheer amount of financial fuel that had built up in the market just waiting for a spark.
And yeah, on the surface, this looks like a classic long squeeze. But the forensic data from the aftermath, well, it reveals a completely counterintuitive setup. You see, the market set a trap, all right? But the real target wasn't who you might think. Drop a like and share if you find this valuable.
So how is this trap even built? You've got to think of high leverage positions as pools of gasoline just scattered across the price chart. The more concentrated they are, the more violent the explosion is going to be when price finally makes contact.
Okay, take a look at this comparison. On the left, from January 27th, we see significant liquidity building. Now look to the right, just 24 hours later. Notice those intensely bright yellow bands? That is a massive wall of leveraged longs, built up right between the $87,000 and $90,000 levels. And because all that liquidity was packed into such a tight range, it became an obvious target for the market to hunt. Subscribe to the YouTube channel for more deep dives.
All right, now for the forensic analysis. Let's see exactly how this whole structure was methodically taken apart, starting with the very moment price began its attack.
Look closely at the price action right here on January 28th. You can see the candles pushing down, testing the bids, and literally probing the defenses of those highly leveraged bulls sitting just below that $89,000 level. This was the first warning shot.
And by the morning of January 29th, that $88,000 wall was breached. Notice how the bright yellow band of liquidity that was right here is now just gone. It's been consumed by the price action, and that's what triggered the first wave of forced selling.
And this is the crucial part, the mechanics of the cascade itself. When one pocket of leverage is liquidated, those traders are forced to sell. This selling pressure pushes the price down even faster, which in turn triggers the liquidation of the next pocket of long sitting just below it. It is a brutal chain reaction.
And here is that chain reaction hitting peak velocity. Just look at this massive red candle plummeting straight down, slicing through the now empty zones at 86 and 84,000 where all that liquidity used to be. Every single level of support just became more fuel for the next leg down. Follow us on Twitter for more updates.
By January 31st, the cascade finally exhausted itself, leaving this behind, a massive liquidity void. The deep purple color you see here, where those bright yellow bands used to be, confirms that the board has been almost completely wiped clean. The market has been reset.
This before and after comparison really drives home the sheer scale of the event. On the left, the dense buildup of leveraged capital. On the right, the complete wipeout. We're talking over $100 million in positions gone. This is the brutal efficiency of the market at work. Drop a like if this visual analysis is valuable.
So with the old structure completely destroyed, we have to ask, what does the new market map look like? Where are the new targets?
This final heat map from February 2nd shows us the new playing field. Now, look closely. Significant new bands of yellow liquidity have already formed. We can now see key support building around 78,000 and a new wall of resistance near 80,000. The old leverage longs are gone, and these fresh liquidity levels are the new magnets for price. Subscribe to the YouTube channel so you don't miss our next analysis.
And this leaves us with one crucial question. Now that the market has purged all of that excess long-side leverage, has it inadvertently set a trap for the bears? Are the over-leveraged shorts who piled in during that crash now the most likely target for the next major move? All right, make sure you subscribe and drop a like below. Follow us on X for more updates, and we'll see you in the next one.